Hey guys, this is Stefan from Investing.eu Academy, and today I'll share with you guys a quick update on Coinbase after the company reported its second quarter results. If for those interested in the full long-term stock pitch, you can find it on our Investing.eu Academy YouTube channel, so make sure to check it out. So, Coinbase just published its second quarter results, and to say the least, the results have been really impressive. But more importantly, I think they confirm our investment thesis, and that's already brought the stock much closer to our target price of $310. So, remember when we actually pitched the stock, we had two catalysts, Bitcoin prices to rally from their lows and earnings to actually beat expectations for the second quarter. And so far they've both worked. And the stock went from $235 when we made the recommendation and is now trading at around $285. But we believe there is still further upside left. So first, let me share a few highlights from the earnings report for the second quarter. So you can see here basically the key operating metrics, and you can see that they've had 8.8 million of monthly transacting users, up from 6.1 million in the first quarter. I was expecting around 8 million, so that's even better than what I was expecting. Trading volumes, they've increased significantly for the second quarter, despite a lower number of assets on the platform. So what that means is basically that customers are more active, which is very positive for the firm's bottom line, as it leads to higher trading fees. Of course, if we look at the financial metrics, it's even more impressive. 2 billion overall revenue for the second quarter of the year. And that brings, total revenue so far this year at $3.6 billion, which is already pretty close from our bear case scenarios for revenues for the full year of 4.3 billion. So, I think now it's quite unlikely that our bear case scenario will materialize. If you go further in the report, let me just find where they actually show the breakdown of all of the different revenues items. Yes, that's here. So basically, here it's quite interesting. First, as expected, most of the revenue is still driven from transaction revenues. About 1.9 billion out of the 2 billion is actually coming from trading fees from retail investors and its institutional investors. But to me, the most important point, or the most interesting point at least, is that the growth in non-retail transaction revenue, so everything except this number, is actually growing at quite a high rate. If you look at the growth rate of transaction revenues from institutional investors, it grew 20% from the last quarter, from 85 million to 102. And if you look at basically the subscription and services revenues, basically it's also growing extremely rapidly. You can see from 50 million to 102 million. So that's growing at almost 100% growth rate just over one quarter. So overall, those non-core activities remain small in the grand scheme of things, but they're growing, and I think they could become a significant driver of returns in the future. So make sure you start tracking those revenues from non-core activities. So what's my overall take on those earnings? Well, we expected the second quarter results to be the catalyst for Coinbase to reach our fair value price of $310, and I think we're getting there, probably even more quickly than we anticipated. But more importantly, I think the results really confirm our thesis, which is based on 3 points. Okay, so the first one was that buying Coinbase is really a smart bet on crypto prices. It's smart because it's a bet on crypto volatility rather than just on prices going up. And I think, Coinbase's strong results on the quarter when crypto prices overall went down really showed that our thesis is correct. Volatility matters more than price going up for Coinbase. And I think, the market is finally starting to realize that. The second point of our investment thesis is that it's a free option on the growth of the whole crypto ecosystem. We think the market mistakenly sees Coinbase as just a play on Bitcoin and Ethereum trading volumes. And, they fail to understand the huge potential for innovation in the crypto economy and how Coinbase could really grow these other sources of revenues to become significant drivers of their overall revenues. We've seen growth in institutional clients, ecosystem partners, but also from its other activities like, subscriptions and services, as we've just showed before. So, I think over the next few years, huge potential from these non-core activities, and the market is not yet pricing those opportunities. Lastly, I think Coinbase has two huge competitive advantages. The first one is it has a strong brand name. It's perceived as the best in class for quality, safety, security for all of its products and services. And secondly, unlike its main competitors, Coinbase has really focused on developing strong compliance policies and built close relationships with regulators. And that should really benefit the firm, once regulation starts to tighten. I think that's what we've seen this quarter. They actually highlight in the report that they attracted top clients like SpaceX, Tesla, Third Point, Wisdom Tree, Investment, etc. So, I think it's already proving that those two competitive advantages, strong brand name and strong focus on regulation and compliance, are actually convincing top clients to join. And in the future, that should allow Coinbase to, preserve its high margins and even continue to gain further market share. So, what now? What's going to happen? Well, we initiated a buy recommendation when the price was at 235 with a price target of 310. The price is currently 284. It hasn't moved that much following the earnings results. And I think it has to do with the lower guidance provided by management for the third quarter. And I think it makes sense. I think the second quarter was an exceptionally good quarter because it was highly volatile, because crypto prices were highly volatile. And I agree with management's assessment that the third quarter revenue should be a little bit lower than the second quarter. So, I'm quite happy with our revenue estimate of 6.2 billion for our base case. As I said earlier, I think the bear case now looks very unlikely, 4.3 billion. I think we're going to be well above that. And I think actually the bull case is not completely unrealistic. I think there's actually a pretty good chance we could be somewhere between our base case and bull case. But, overall, I don't think this quarter changes dramatically our revenue estimates. But what I think it does change is the re-rating of the multiple. Coinbase currently trades like a traditional exchange, like an online broker, but that's completely wrong in my view. I think it should trade closer to what financial payment services firms are trading at, or closer to a high growth, a fintech firm. Coinbase has huge growth opportunities ahead and the potential to really disrupt further the industry. So, I don't think it should be trading at 9, 10, 11 times. I think it should be trading closer to 13 to 15 times. And, if you use a multiple of 13 to 15 times and our base case estimated revenue of 6.2 billion, that gives a share price of around $330. And I think that's what we'll see most likely, price around $310 to $330. But of course, we always have to assess the potential risks as well, and we'll make sure to update our views on Coinbase. So hope you enjoyed the video. Make sure to sign up, to follow on LinkedIn and all of those things to receive more updates like that in the future. Speak to you soon.